Here we go. I've been talking about this now for 2 weeks. We done had 2 bloody days, and I couldn't be more excited. This is when money is made, people. This is when money is made. As you can see, the S&P is down $118, the NASDAQ down $448, and the Dow is down $780. And that's just for the day. It was just as bloody as yesterday. I believe what's really leading this down is the US 10-year is all the way down to 3.8%. I believe that's what's really taking this market down. The bond traders out there who's normally known as being smarter and can predict better than stock traders took the 10-year down all the way down to 3.8. Just in May, the 10-year yield had hit 5%. What's even a little bit more scarier is the VIX. As you can see on here, the VIX is all the way up to 2568, and we got a long way to go still. I don't even think there's fear on the street until the VIX hit 40. Again, I don't believe there's no fear on the street until the VIX hit 40. And as I said, I've been talking about this for 2 weeks. I don't know if this is it. But this got me real excited. This is when money is made, people, and we got a long way to go. So why do I think this might be it? I've been talking about it for 2 weeks now. If you look at some of the consumer staple stocks out there, their earnings are terrible. Starbucks, terrible. Even though the stock popped since then, but it's down from like 150 all the way down to 70. UPS all the way down to 128. And I've been talking about that for a while. Terrible earnings. McDonald's, terrible earnings. Even Hershey's, terrible earnings. These consumer staple stocks are reporting terrible earnings. And the reason why is because there just ain't much work out there. The employment rate came in today at 4.3%, the highest in like 2 or 3 years. You know, there was 104 jobs created. Happy those people got jobs, but that was for off an estimate of 185,000. This is all just beginning. I made a video. The Fed, they should have cut on Wednesday. They didn't cut. They're still talking about February, even though they're talking about a 50 basis point rate in September. What I'm really hoping for is that they come out in August and surprise us with a rate cut. If they do a rate cut in August, it's going to get bloody. It's going to get real bloody. And why would I be happy? Because it's bloody. That's when money made. So before we go into some of the other reasons why it might be bloody, let me talk about what we should do and why I'm excited. What you should do as the market start going down like this, like I said, there's been two real opportunities in my life, 2000 and 2009, where the market performed like this, possibly bringing up opportunities that may come. We may not get to 2009 because that was bloody. 2009 was bad. I don't think we can get that, but I believe we can surpass 2000 easy. Easy. First, I want to talk about a comment also before we go into what you should be doing. I got a prediction on the housing market that the housing market is going to tank easy, 30% easy. Prices is already starting to come down. They're already starting to come down. I looked up houses. People are starting to mark their houses down. And it's counterintuitive to logical economics that as interest rates go down, that housing prices will go up. I didn't understand that. That was the comment somebody told me. Where's the logic? Where's the logic in that? As interest rates go down, housing prices go down. I'm going to tell you where the logic is at. During COVID, housing prices blew through the roof. And I think for that reason, a lot of people, at the time I was watching, I couldn't believe a lot of people was leaving major metropolitan areas, moving out to the suburbs. If you lived in a major metropolitan area pretty much your whole life, you like to be in the urban area. Why? Because of a COVID would you move to a city? I understand they was trying to get away from the virus. I don't know if them people happy. I don't know if them people are happy, but I said many times before, I got a 2.48% home loan. I ain't selling my home, giving up 2.48% to go buy another home. I think housing prices, interest rates on houses came down. I believe today to 6.5, something like that. They're coming down sharply. I think we got a long way to go when this Fed start cutting rates. But what's going to happen is all these people, as the rates go down, people like me that wasn't willing to give up their low interest rate at 7%, we might be willing to let it go at 4%. I might be willing to go into a new house as I keep aging and my house too big and all my kids leave. I might be willing to buy a house at 4%. There's going to be a lot of people out there like me that's willing to list a house at 4%. And as housing prices fall, stocks fall, people feel poor. People with a little bit of money, they start feeling poor. They feel poor. So they stop spending. So we got people on the low end who's struggling, slowing down, purchasing items like McDonald's, like Hershey's, like Starbucks, not mailing anything through UPS. It's the cross-the-board. Procter & Gamble missed their sales forecast. Walmart come next week. I can't wait to see what happened with that next week or sometime soon. I can't wait to see what Walmart report. Then we can really know what the economy is doing. Let Walmart come in bad. Woo, it's going to get bad. But this is foreseeable. This is real easy. And if the Fed come and cut before September, it's already getting bad because they said they raised just from 2 days ago. They're predicting now they're going to go down 50 basis points instead of 25. And the street's going to take that as fear. And when we see this VIX hit 40, that's when you start looking up. Don't even look up. Don't even look at stocks. Don't look at nothing until the VIX go up. I'm excited. I'm excited, y'all. I'm real excited. But what I would do, what I'm doing, I tell you what I'm doing to make sure I'm ready. I get the stocks that I want to own. I like to evaluate companies. I'm a value investor. So I evaluate companies and I know exactly what I want to buy. And when I feel that we at a bottom, and the stocks right now that I got, they're doing good. I like Meta. I love Meta. I think Meta is one of the best companies out there. And they was up after their earnings, but they're down just due to the market downturn. You know, Google, Amazon, one of my favorite companies. But they had to up their spending in AI chips to try to keep up with the other companies. But when as they see AI go through the market, it's going to do nothing but help their companies, make them more efficient, provide new products for companies. They're just going to be doing better. So you got to have companies like that when the stock market fall. That's how you make money. It might be a one-in-a-lifetime opportunity to make this money. So you got to be ready. I made a video on being ready. You got to be ready. I hope, most of my money is in T-bills right now. They're still earning 5% because the Fed hasn't cut rates yet. But as soon as we get to the bottom, I'm going to sell off them T-bills, let them T-bills expire, and I'm going to put that money to work. And if you're not a big time looking into individual stocks, I'm going to give you 2 stock quotes that you should look up, you should learn about. You don't have to know hardly anything about investing. These stocks will allow you to be very well diversified, not very much risk. You're going to go with the market go. First being the SPY. If you want to be real diversified and you want to go in the direction that America want to go in, you purchase the SPY. You don't even have to know much about the stock market. All you know is you buying America's 500 best companies. Man, if we can get this market down 30%, I would swing for the trees with SPY. And when it comes back, when it's back up 30%, your investment going to be up 30%. And SPY going to come back. America going to come back if we get this downturn, I believe. I might be wrong. I don't know. But this seems real easy to me. Real easy. Real easy. The other one is the QQQ. If you want a little bit of risk, a little bit more risk than the SPY, the QQQ tracks the NASDAQ top 100 companies. Microsoft in there, Amazon there. I made a video on QQQ. You can go to my page. I'm going a little bit more I want a little bit more detail in that one than I will on here. But that'll give you the opportunity to buy Tesla, Microsoft, Amazon, Meta, Google. I believe just those 5 make up like 30% of the QQQ. Amazon's tanking. Amazon's tank, but I'm excited. I own Amazon too, but I'm excited because I want to buy more. I want more Amazon. I want more. And if Amazon was at 200 only like 2 weeks ago. If I can buy it at 115, whoo, I'd be a big time buyer of Amazon at 115. So that's what I would do to prepare for the storm when this storm comes. That's what I would do. I would be ready. I'm gonna make a lifetime. This is gonna give me the opportunity to make a lifetime invest. In 2000, I got crushed. I got crushed. I had a stock called at home that went bankrupt. I got crushed in 2000. I thought I knew what I was doing. That was 24 years ago. 2008, 2009, I blew up. I blew up. I mean, I really did well. 2009 all the way to about 2014, I did well. I was given an opportunity in 2000 to purchase stocks well below what the company was worth. And that's what you want. That's what you want. I hope this information is helpful. I've been talking about this now for 2 weeks. 2 weeks now. It's coming a little earlier than what I thought. So this might not be it. But this is easily coming. Easily coming. Like I said, an easy way to tell is to put the VIX, the VIX. If you follow the VIX, when it hit 40, we know there's fear on the street. The VIX is at this highest point in 4.5 years. Highest point in 4.5 years. We just had a market been going up for years, but since like 2014, we've been having more. We had the COVID scare, but it came right back up. So this is an opportunity. I really hope, my videos lately has been doing better, probably because I've been talking about this for 2 weeks. Don't nobody want to hear it. But now that we seeing red all over on the screen, I'm hoping that some people is listening. And I just want people to be able to take advantage of a one in a lifetime opportunity that's come our way. And when the Fed start cutting it, because everything is just so irrational, just like the housing market, normally when the Fed start cutting, money get cheaper, then the stock market normally go up. That's not going to happen this time. Everybody predicting it to be a soft landing. I believe our landing is going to be hard. It's already hard. That's the crazy part. If you go out on the street and talk with people, there's people working 2 or 3 jobs, can't find a job. It's hard out here. It's hard out here. I'm passionate about it because I'm excited. I'm excited right now. When a one in a lifetime opportunity, this will be my 3rd one. I got crushed in the second one. I wasn't ready. I mean, the first one, I wasn't ready. 2000, I wasn't ready. Think about it. Amazon was selling at $5 a share. That was probably several stock splits. $5 a share during the 2000 crush. But I wasn't ready. They blew my brains out. 2009, I was ready, but this time I am really ready. I'm really ready. And I've been waiting now for a couple months. I just really started talking about 2 weeks ago. I was just selling puts, buying T-bills, making videos talking about that. But this might be the big one. This might be it because we're completely housing overvalued, stock market overvalued. And the bond, as I said earlier, the bond people are known for predicting and being smarter than stock investors. I mean, in 2 months, 2 months, 3 months, the yields went from 5% to 3.8. Going lower, they're thinking and doing the Fed's work for them, lowering the interest rates before the Fed even lowered the interest rate. They was late to raise interest rates, and now they're late to lower interest rates. I call for it. I made a video on Tuesday talking about lower rates now. Lower rates right now, and it's bad out here. I talk about my trucker friends that I know struggling out there. Shout out to Big Freaking Trucking. He had to stop doing warehouse to warehouse deliveries. Now he's having to get on the boards and take truckloads because he's going to keep working. He's going to keep grinding. He got to keep getting that paper in. He just can't sit at home. He ain't going to sit at home. He's going to get to work. Shout out again to Big Freaking Trucking. But it's hard out there. It's already a recession to people on the street. The stock market was positive just 2 days ago. Everybody was positive still. Today, they not positive. CNBC finally come around, realize that this market ain't good. Good luck investing. Be ready. If you like this content, please share, please follow.